Hello and welcome to today's daily analysis. Today is Wednesday, 22nd May 2024. And here are key things you need to know. For the dollar index, hit a 104.6 level on Tuesday. The Fed officials continue to express caution about easing policy prematurely amid signs of strong US economic growth and persistent inflation. The market focus is turning steadily to Wednesday's upcoming Federal Open Market Committee minutes and mid-level data on Thursday and Friday, including S&P PMI and durable goods orders. The US dollar index has a muted start to the week, trading around 104.5, with little change despite recent soft data. As financial conditions continue to ease, the Fed remains cautious about easing policy prematurely. The US economy is showing firm signs of stabilization despite recent data showing some underperformance. Still, the Fed remains wary of premature easing as financial conditions continue to ease. After last week's disappointing inflation and retail sales data for April, markets will be looking for S&P data later this week to learn more about the health of US economy. And the prospect for the Fed Reserve cutting interest rates this year has weighed on the dollar and US bond yields. The markets continue to bet on an easing cycle starting in September, with Wednesday FOMC meeting minutes to be key. The technical indicators on the daily chart reflect an undecided market awaiting direction. The flat position for the 14-day RSI in negative territory reveals the conflict within the market, detailing the battle between buyers and sellers. Additionally, the MACD histogram showing the red flat bars support the idea that bears are trying to seize short-term control. However, the stalled nature suggests a lack of decisive momentum in either direction, reflecting a market waiting for clear direction. Similar reasons are covered in the simple moving average section. The US dollar index is trading below its 20-day moving average at 105.23 and 105.11, 23.6% Fibonacci retracement level, indicating that bears have been made some progress recently. However, the fact that the US dollar index remains above the daily chart descending wedge support at 103.85 and 104.25 suggests that the long-term bullish momentum cannot be completely ignored. The oil prices again tested support for a 2024 rebound on Tuesday. Markets are ignoring current events in the Middle East as there are no risks in the region's output. The US dollar index is looking for direction in a tight range at the start of the week. WTI crude oil prices extended losses on Tuesday to trade just below 78 a barrel following recent developments in the Middle East. However, the death of Iranian president in a helicopter crash and emerging health issues from Saudi Arabia king did not appear to affect markets. Crude oil prices continue to struggle even as US consumer inflation data cooled last week as investors weighed recent hawkish comments from the Fed. In Canada, the expanded Trans Mountain pipeline began commercial operations this month, overcoming years of regulatory delays and construction setbacks. The expansion will transport an additional 590,000 barrels of oil per day from Alberta to Canada Pacific coast. Investors are now turning their attention to supplies from the Organization of Petroleum Exporting Countries and its affiliates. They are scheduled to meet on June 1st to formulate output policy, which will include some deciding whether to extend voluntary outputs cut of 2.2 million barrels per day for some members. The US crude oil is stuck in a technical consolidation between $80 and 77.7 as energy traders eye a support resistance band around 79.5. The prices have recovered from multi-month lows near last week's low of $76.34, but upward momentum remains limited. Therefore, on the downside, attention can be paid to $77.71 and a breakout will point to 76.8 and 76.34. On the upside, keep an eye on the 200-day moving average at 79.66, with the next level looking at $80. And lastly, we have for gold, which turned positive on the day as it rallied during the US session and climbed to near $2,420. A pullback in the benchmark 10-year US Treasury yield helped the gold prices rebound after falling sharply to 2,406 from a record high of $2,450 at the start of the week. The gold prices extended their retreat from Monday record's high of 2,450 as the dollar attracted safe haven demand amid broad risk of sentiment. In the absence of the major US economic events, the investors' attention is once again turning to upcoming speeches from the Fed policymakers at the beginning of the week. The cautious comments helped the dollar find demand while also fueling a rebound in US Treasury yields as bets on aggressive rate cuts by the Fed eased. As a result, gold prices have pulled back from records high. At the beginning of the week, Iranian president and other government officials were killed in a helicopter crash in Iran's East province. Subsequently, the price of the gold jumped to $2,450, hitting a record high. Risk of sentiment has kept safe haven inflows into the US dollar in trading so far on Tuesday, putting further selling pressures on the gold prices. The gold traders also avoided opening new positions ahead of speeches by a series of policymakers, including the Federal Reserve, and ahead of the release of Fed meeting minutes, as this could have a significant impact on risk sentiment and the value of the dollar. Observed from the daily chart, the gold prices tend to continue their upward consolidation, with gold prices trading above all moving averages. In fact, the 20-day simple moving average maintains modest upward momentum near $2,345, while the longer-term moving averages of 200-day 2062 and 100-day 2171 are below the 20-day EMA. In addition, the 14-day RSI has turned lower but remains above the midline, currently hovering around 64.46, with no signal of upward exhaustion. This indicates to the downside for gold prices appears to be limited. Gold buyers will have to hold on above 2,400 if yesterday's psychological level of $2,450 is to be breached. If gold prices continue to move higher, it could open the door to a new rally towards 2,500. However, gold sellers need to defend the 2,400 round figure with all their might. Failure to do so could trigger a fresh decline towards last Friday low of 2,374. The next downside target is the 14-day simple moving average at $2,355. And this is the end for today's daily analysis. If you have any questions or is interested in trading, feel free to reach back to our channel. Thank you.